Imagine the entire gold in the world can be fit into 4 Olympic-sized swimming pools. One very interesting thing I read recently, it was Chanakya who taught us that 25% of your wealth should be in gold.
Oh, really? Jewelry specifically, do you think it's a good investment?
The moment you convert the gold into jewellery, because of the emotional value attached, you will never sell it. I am very strong believer, Indians, like we have cash balances in our phone, will have gold balances. And I think DigiGold will pave the way.
There's a lot of activity in the secondary market for SGBs.
Stay away from secondaries. Why? I'll explain you in very simple terms, right?
What does gold ETF mean?
Any portfolio which doesn't have gold is not a balanced portfolio.
Hello and welcome to Power Academy. As Indians, gold has a very special place in our hearts. And now that the festive season is already here, I'm sure a lot of you would be thinking about buying gold. But what is the best way to buy gold? To talk more about this, we have with us today Manthan, who is the founder of a gold investment platform. So let's make an informed decision this festive season. In this video, we will talk about 1. How much gold should be allocated to the portfolio? And second, the different ways to invest in gold, primarily digital gold, physical gold, sovereign gold bonds or SGBs, and gold mutual funds and ETFs. We'll talk about pros and cons across each of these investment asset classes. That being said, wish you a very happy Diwali and let's get started. Hi Manthan,
Hey,
welcome to Power Academy. So nice to have you here. And Manthan, with festive season and the wedding season coming up, gold demand is through the roof. And as we do this podcast, right, we thought let's do it on gold because it's often debated whether you should look at it as an investment or should you look at it from a consumption angle only.
Absolutely.
So let's get started. And the first thing is, why do you think India and world in general is so obsessed with gold?
One very interesting thing I read recently is it was Chanakya who taught us that 25% of your wealth should be in gold.
Oh, really?
And what was the reason? It is a bet against your kingdom at that time. So let's say there are turbulent times in your kingdom, you want to leave. You can't take your land and run. You can take your gold and run, right? Go somewhere, settle down, and gold is accepted there also. It's a universal currency. And if I talk from that time to now, why has it still sustained? Gold has stood the test of time, right? Why? If you look at the gold properties, one, it's liquid, extremely liquid. You want to sell, you want to take loan against it, just go to any nearby shop and you will be able to do it. Second, it is limited. It was created during supernova. It can't be duplicated, it can't be created again. Truly limited.
True.
Right? Third, it is also accepted everywhere else. You go to any country, anywhere, it's accepted, right? And fourth and most important thing, very specific to India is, like generations after generations, it has saved people in the turbulent times. I have my family's examples also. Everybody has their own story. Generations after generations, the only thing that they have seen continuously grow is gold. And that's why it's very close to heart. Our grandparents will tell us, हमारे time पे gold इतना था. Parents will tell, हमारे time पे, and it is continually going, right? So that's why I think it is deeply ingrained in the Indian psyche.
Got it. You are in this industry and you would have done that research. I'm just curious, how much gold does India own?
So, Indian household own gold worth $2.1 trillion. To give you a sense of how big is that, Indian households hold more gold than combined gold reserves of the top 10 economies of the world. That's how big it is, right?
Very interesting. As we have seen gold always rising, right? What determines the price of gold globally?
So, it's a commodity, right? It's a demand-supply game. If the demand increases, the price increases. The important thing to understand is this is limited. To give you a picture of how limited this is, imagine the entire gold in the world can be fit into 4 Olympic-sized swimming pools.
Oh.
इतना ही है. उसमें से 3 swimming pool worth is already mined. and one is left to be mined.
Okay.
इतना ही gold है. अब इतना ही gold है, then that's a demand supply game. You have a gold, I want to buy, I'll pay extra, so price बढ़ता है. So
Cool.
that's how it's determined.
Okay, got it, understood. Now, we have often seen that जब भी markets fall down, right, gold always rallies. Happened in pandemic, happened in 2008 crash. Why does that happen?
The way to look at it is whenever market downturns, inflation, devaluation, any uncertainties happen, people go back to safety. So gold is that safe zone because that is the only true thing which is limited. Whatever things have stood test of time only are able to do that because fundamentally कुछ सही है. वरना across time zones नहीं रहता, right? And gold has been doing that. इसीलिए turbulent times पे people go back to safety and gold पे जाते हैं. इसीलिए gold की प्राइस बढ़ती है. स्टॉक मार्केट में इश्यूज चल रहे हैं, गोल्ड पे करो. वॉर हो रहा है, गोल्ड करो. इन्फ्लेशन बढ़ रहा है, गोल्ड करो. That's
Got
the
it, understood.
historic.
And then from a portfolio perspective, right, there's equity and debt we talk about, but gold, you know, is that like the third pillar in the portfolio? What's your approach in terms of diversifying your portfolio, having gold in it?
So any portfolio which doesn't have gold is not a balanced portfolio. I very strongly say that, right? And in India, we, because of our affinity to gold, everybody hedge तो सब करते ही है. 20-25% of your gold. That's like starting from a normal employee to a CEO of Zerodha. Everybody will propagate this rule, right? My simple rule is your age should be the allocation of gold. 100 minus age can be the allocation of other slightly riskier assets.
Okay.
For example, I am 30 years old, example, then 30% of my portfolio at minimum has to be in gold.
Okay.
70% can be equity because my risk appetite is high. My dad is 60, right?
Yeah.
So which means his risk appetite is much lower. So 60% of his portfolio should be in gold. So that's a very simple rule that I tell everyone.
Got it. Gold versus there's also debt is also as safe, like debt instruments. But then how do you define like how much should you keep in gold versus debt? Because both of them are providing security and safety in your portfolio.
True. I think debt, the only challenge in, I think debt also in India, it will grow. But as soon as there are no risk, like debt fund maybe, there are different types of collateral and all that also, right? But if you say completely risk free, then I think similar. You can consider it same way. You can, now this 30% you can divide according to your risk appetite.
Understood, understood.
Yeah. But when we also do a research and all that, they want to stay away from debt. But that is changing. I think India is also, consumer is changing, mindset is changing, appetite is changing.
Right, understood. As I understand, there are 4 ways to invest in gold. There's physical gold, there's digital gold, there's SGBs, and there's gold mutual funds and ETFs.
Yes.
So we'll go through them one by one, and let's start with physical gold.
Yes.
In India, there's a lot of physical gold, and you know, you also are in this business. So what's your take on having physical gold as an investment, and what are the kind of returns you would expect there?
If you are talking about gold as a hedge, true hedge is physical. It can't be a paper. So whatever instruments that you talked about, you can categorize them into 2 ways. One can be converted into physical, cannot be converted into physical. So physical gold hai coin, jewellery or digital gold, all these are physical gold. Paper are which can't be converted. I won't say paper, are ETF, SGBs and all that which can't be converted into physical gold. So categories are these 2 only.
Got it.
And historically, if you see performance of gold, it has grown by 11-12% if you take any long term period.
Okay.
Right. For example, if you take the start of the Nifty or maybe 1999, from the time we started tracking it to now, Nifty would have grown by 13.5%. Guess how much gold has grown?
Around the same or?
Around the same, 12.5. Right? I'll give you a very interesting parallel. In 1964, with 1 lakh rupee, you could buy more than 15 kg worth of gold.
Okay.
Now, 60 years plus, in 2024, you cannot even buy 15 grams.
Yeah, true.
That's the So that's how it has performance of gold has been, right?
Right.
So, and historically also that has been always the case.
Right. In India, how much gold can I own? Do you have any?
There is no limit.
There is no
You
limit.
can own as much gold as you want.
Okay.
The only thing is, anywhere in India you buy physical gold, you have to pay 3% GST to government,
Okay.
right? And as and when applicable, you pay taxes.
Okay.
Right? That's about it. Otherwise, there is no limit.
Okay. So there are different forms of physical gold. There's bar, coin, bullion. There's jewelry, right? Jewelry specifically. Do you think it's a good investment, and what form of physical gold is good investment according to you?
So all forms of physical gold is good investment, because finally physical gold is your hedge, right? If you want to truly hedge something, it shouldn't be a paper. It should be something that you hold. Now coming to forms of different physical gold, I have a controversial thing to say.
Okay.
Right? So there is a very big misconception that jewelry is a bad investment, right? And I was also a believer of that. You pay 20% making charges. Why, right? Just buy a physical bar, a coin or something like that, right? One thing that I have come to understand is, and I think you guys would also know this, true way to create wealth is hold an asset for long term.
Correct.
My family's own story is, my dad's wealth is primarily in real estate and gold, right?
Okay.
If you say CAGR, it is 12 to 15% only, but he kept it for 30, 40, 50 years, and that's how it has compounded, right? Now the hack in jewelry, which I now appreciate the hack, right? The moment you convert the gold into jewelry, because of the emotional value attached, you will never sell it.
Right.
And that's a way to hold it for long term.
Psychological lock-in हो गया है तो.
Psychological lock-in हो गया. Real estate में you buy it, very hard to sell real estate, right? इसीलिए people make money in real estate, right? That's the perception, right? Everybody has till now made money because they hold it for long term. Gold में I have seen a lot of cases where if you hold it in bars and coins and all that, some emergency and you will still sell it. But jewelry में convert कर दिया. You will find any other hack, but you will never sell it. Right? So that's very powerful. And this is time tested truth. These are not some hacks that everybody is thinking on their own. These are generational wisdom that is there, right?
Yeah, very interesting, very deep rooted insight in like human behavior. And last thing on physical gold, right, with respect to hallmarking. Now if I'm buying a bar of gold, what is hallmarking, if you can explain for our audience, and how do I know that the gold that I'm buying is pure?
So for hallmarking, you need to understand why did it come into existence, right? India, there are lakhs of retailer of gold, right? So the challenge was, how do you protect a consumer from purity perspective, right? So Bureau of Indian Standard came up with this concept that any jewelry or a coin, before it is given out to a consumer, has to be hallmarked. What does it mean? So Bureau of Indian Standards and NABL both together do this, that on the jewelry you will see a marking with a logo and a 6 digit, 7 digit, I don't exactly remember, but some number. It's called unique identifier for HUID, hallmark unique identifier, right? They only mark this when they verify that the gold is pure.
Okay, so the gold is sent there and then they verify.
Sent into any time the gold or coin or a jewelry is given to you, before that it has to go there, it has to be hallmarked, and then it can be given to you.
Okay, so then if I am buying physical gold, I should look for that hallmark
and
have
also,
that ID.
There also digital wave is coming. So in last 6 months, if you had bought any jewelry, there is a app called BIS Care or something. I think we can Google it, where you can put your number and they can tell you whether it is truly. Somebody else can also randomly put some number and all that. How do you verify? Now there is an app through which you can verify.
Okay, very interesting. On physical gold, I think I understood a lot of things. Let's move to digital gold. The world is going digital. First of all, I think there's a little skepticism around digital gold. So if you could explain what digital gold is and why do you think it's important these days?
So not many people know this now. Digital gold is actually physical gold stored inside a secure, insured locker.
Okay.
And that locker is managed by SEBI registered vault provider.
Okay.
So physical ही है, you pay the 3% GST, it's a legit gold, right? You can convert it into gold coins anytime you want. You can redeem it as jewellery.
Okay, so I can take back physical gold
Absolutely.
against the digital investment.
Absolutely, because it's physical.
Okay.
The powerful thing about digital is it's fractional. So today I can say I want to buy 100 rupee worth gold. I can buy it. Why? Because collectively, let's say today a lot of people bought and there is 1 kg gold bought together, they store 1 kg. Now anytime based on your ownership, you can say, hey, now I've reached 1 gram, send me 1 gram 1 gram coin, and it will come to your home with insurance.
Okay. So you spoke about multiple things. There are fractional ownership and there's also gold leasing. There are a lot of innovations that are happening in digital gold. Could you share some light?
If you look at anybody in India, like millions of people, how they accumulate gold. Let's look at that journey, right? With discipline, once they have significant money, they will take out time of their busy schedule, go to a nearby jeweler and either buy a coin or a small jewellery or invest in their schemes, jeweler schemes, right?
Yeah.
Now once they have gold in their hand, now they are worried about safety, right? So now they'll go to their bank, open the bank locker and store it, right?
Yeah.
This is very unstructured, effortful, requires discipline, right? True way, what is it this user trying to do? He is trying to accumulate gold slowly. And digital gold will pave the way for this solution. Why? Because like you said, now at the click of the button at your home, you can say, I want to save 100 rupees for X years and I want to reach my goal of 10 grams, 100 grams, 500 grams, 1 kg depending on your need. And I can just start that. And seamlessly every day your gold will keep on getting accumulated. So I think if you truly look at the structure, right, everybody accumulates gold. They convert it into either jewellery or take loan from it or pass it on. Jewellery mein there are a lot of innovations, there are a lot of big companies here. Loan mein there are a lot of big names, right? But there is no true innovation that happened here. 10-15 साल की journey, 10-15 years of journey prior to that is the accumulation journey and there has been no innovation. And digital gold will pave the way for that.
Right.
Because now you can just set up and start accumulating very seamlessly. Like every wedding, the stressful thing is biggest cost of the wedding is gold.
Totally.
And that is very stressful. Imagine you can just stress free set up 100 rupee a day, 500 rupee a day depending on your need. And 15 साल चल रहा है. And slowly accumulate हो रहा है. Right? That's very powerful. I'll tell you one statement. I am very strong believer. Like Indians, like we have cash balances in our phone, will have gold balances. Every Indian will have gold balance and that's how they will accumulate gold. And that's how they'll redeem it to jewellery or whatever their use cases are, loans, etc., etc. And I think DG Gold will pave the way, right? Now, that has happened, one, fractional. Second, because UPI AutoPay gave that infrastructure. The third and a very interesting thing that is happening is, like real estate is completely fungible. You can take a loan against it, right? You can earn a rent from it,
correct,
right? You can sell it and convert into cash. Gold may loan happens, but you cannot earn from your gold, like rent, right? And that's, I think, is happening with gold leasing.
Okay.
So the gold leasing as a concept is, you can say, hey, this is my gold. I want to lease it to a jeweler. And they'll pay me interest in gold grams. Right? It's like real estate. I have my home, I'm renting it to you and you'll pay me rent.
Okay, so I'm still buying gold.
Your own gold.
It's backed by physical gold. I can anyways take it back from the jeweler also.
100%.
But they're giving me interest in the form of gold.
Correct. And that's very powerful. And I think as Gullak, that's where we are paving the way. right, with
Very
our Gold Plus
interesting.
product.
Very interesting. In terms of the any risk on any risk and are there any taxation, like is that taxation different from the physical gold or
No.
it's
So first of all, taxation is exactly same
Okay.
as physical gold.
okay.
Same, 2 years before STCG, after 2 years LTCG, and this is only applicable when you sell.
Right.
Let's say you don't sell, you just convert it to coin and make a jewellery and all that, you don't pay any tax.
Got
Right,
it.
because it's yours, you have not sold it yet.
Right. Understood.
Now coming to
Around
risks. So
digital
for
gold.
that, I think we need to understand how does it work, right? Like I said, there are 3 entities involved,
Okay.
right? One, there is a vault provider.
Okay.
There are entities like SQL is one entity. They are
Okay.
SEBI registered vault provider.
Okay.
So whenever with your digital gold provider you buy gold, the gold actually gets stored with the vault provider.
Okay.
They don't have access to your gold.
Understood.
One. Secondly, that gold is 100% insured.
Okay.
Some entity. For example, on Gullak, I think the insurance is by ICICI Lombard.
Okay.
So it's 100% safe. Let's
Okay.
say earthquake comes in, something else happens, no risk, right?
Okay.
Third, this vault provider is there, you are the owner, they are the custodian. But how do they ensure that every day the right amount of gold is transferred to
Right.
here, or when you sell it, or
Right.
when you redeem it, it's transferred back? There is an entity called trustee.
Okay.
They are a third party entity. Their job only is to ensure that this keeps happening the way it is designed. So these 3 entities are involved.
Okay.
So the risk involved, what I tell the customers is, wherever you are investing, find out, is there a vault provider? Who is the
Okay.
vault provider?
Okay.
Who is the trustee?
Okay.
And is this operation, these entities are involved or not? If not, don't do it.
Okay.
Yeah.
Is it like centrally in India or like different entities in different locations in
Different entities in different locations can do
Okay.
it. Eventually,
So you
I
check for your
think-
location who is the
correct. You whichever platform you are using, find out, because that platform
okay.
will have to mention
Understood.
who is the entity that
Okay.
is first, who is the vault provider, second, who is the third party auditor, trustee,
Okay.
right? Trusteeship and vault provider is for something you check on your platform, and that's how you get confidence.
Okay. And just curious, so given that it's equivalent to physical gold, I can take a loan on physical gold. Can I also take it against digital gold?
Not at the moment, but you can deliver your gold at home and take a
And
loan
then take
against
a
it.
loan.
Like you can deliver gold at home, convert it to jewellery. So currently, as per SEBI, you cannot take a loan against digital gold. But I think there are a lot of innovations happening there also.
Okay.
So I think over time you will see some changes here.
Okay.
I think it's already in place. Some
And-
are already on track.
Okay, great, perfect. So, lots of clarity on digital gold. Let's move to the next form of electronic gold. I say that is SGB. It's the most common, most popular, rather, I would say.
Sovereign gold bond. Yes.
It's the talk of the town. So, could you explain for our audience what SGB or sovereign gold bonds are, and the whole news speculations around getting discontinued? Your take on that?
So, sovereign gold bond is something that RBI issues on behalf of government.
Okay.
So they use the money, and you are given a paper which is said, let's say you bought 1 unit, you are the holder of 1 unit.
Okay.
Right? 1 unit is 1 gram. Right?
Okay.
Now you hold, there is a limit, I think. Individuals and HUFs can buy up to 4 kg in a fiscal year.
Okay. Yeah, I was going to ask that. Yeah.
And I think entities can buy up to 20 kg.
Okay.
And you can invest. The powerful thing is it is issued by RBI, backed for government. So it's in a way backed by government. So it's trust is a fundamental thing there. I think what it looks like is government has a lot of ways and means to borrow, right? I think currently they are not looking to borrow via SGB. In future, if they look at it, they will come back, right? That's what I think. I don't know if there is an official statement, but that's the current news.
Speculation right now, yeah. So if you were to compare SGBs with physical and digital gold, what are like the pros and cons of having?
So one fundamental difference is it cannot be converted into physical. SGB is actually a paper.
Okay.
You hold 1 unit. Whenever you sell me 1 unit, at that time the price of the 1 unit you will get paid. Right? So it's purely from investment perspective.
Okay.
Second, on SGB, you get paid 2.5% extra interest in rupees for 8 years. Simple interest.
Okay.
For example, you bought gold, you bought SGBs worth 1 lakh, simplification, right? First year you will get paid 2.5k. 8th year also you will get paid 2.5k. That's an additional kicker on top of gold price.
Right. So then effective returns turns out to be like 14.
मतलब whatever the gold price appreciation is, you can add 1.5, 1.8% compounded. Simple interest wise, 2.5% extra.
Oh, okay. Understood. And you know, I was reading there's a lot of activity in the secondary market for SGBs. What's the charm, and why do you think, you know, there's so much buzz around there?
So stay away from secondaries. Why? I'll explain you in very simple terms, right? Let's say I hold SGB worth, simplification again, 1 lakh, right? I have held it for 3 years. So I already have the interest paid in my account, 2.5% extra.
Correct.
Right? Now there are 5 years left. Right? The price at which SGB in secondaries are being sold, they are already considering the entire extra interest that is coming as a premium on top of price.
Okay.
So normal price is X. They are saying 2.5% into 5 years, which is let's say 12.5%. It's selling at a premium at 12.5%. So it's as good as then physically kharid lo. Kya point hai? Right? And the biggest, most powerful thing about SGB, which I think we missed earlier, was if you hold it for 8 years, it is tax free.
Okay.
But if you exchange hands, it's not. So that benefit is also gone.
Oh.
Extra 2.5% also you are not getting. Then why do you buy? Doesn't make sense. Right?
Understood.
Because whoever is holding it is saying, I will not sell it because I am the only one who is going to get 2.5% for next 5 years. So I will only sell it at a premium if somebody is ready to give me 10% extra.
Got it. So it's like more like inflated for no reason. Understood. Very interesting. We spoke about digital and SGBs. I think the last part of, you know, gold investment is gold ETF and gold mutual funds, which is more like the electronic version of gold. So for our audience, if you can help explain, what does gold ETF mean?
Gold ETF is basically, it's backed by gold.
Okay.
But cannot be converted into gold. It's purely trading, investment purposes. If you want to buy, let's say if you want to make benefit of price appreciation, so you can buy that. But it's not physical gold. Okay. You can never convert to physical gold.
Understand. You said it's backed by physical gold.
Backed by physical
gold. How does that price change? What does the NAV of an ETF mean?
So that's the confusing part in ETF. NAV, basically, because it's backed by gold, it's gold price only. The reason NAV came into the picture is because it's ETF, expense ratio. They are also, whatever money they are spending, their expenditure and all that, they have to take into the account. So NAV is gold price plus their expenses and all that reduced. So that's why you will see that ETF returns are typically 1 to 2% lower than physical gold. Why? Because they also spend money, their expenses also there, expense ratio and all that.
Interesting. Manthan, as you mentioned, in gold ETF, we don't own the physical gold. Then how is it like with respect to ownership and management? Like it's backed with gold, but how is the management of that gold done? So
it's like you own the contract with the ETF that, hey, I hold this much unit. Okay. It's like you hold a piece of paper, but it is backed by gold. So the way it happens is, let's say there is a new inflow of ETF. For example, they release new 20 kg and new 20 kg got bought. They will actually buy physical gold. It is ensured that always it's backed by physical gold, but you don't own that gold.
Understood.
The reason that is done is so that they are able to pay you back whenever you sell. So imagine now everybody is selling. They have the gold. They can sell in the market and can pay you back. So there is no risk associated, but you own the contract. You don't own the gold.
Understood.
That's the differentiator.
Got it. And how is it different from gold mutual funds? Because that's also electronic.
It's not very different. Gold mutual fund tracks ETF.
Okay.
Same ही है.
So same concept
gold
essentially.
ETF लेते हैं.
And is the taxation also similar in ETF and gold mutual funds?
The one difference is in ETF, after 1 year, it is LTCG. In physical gold, after 2 years, LTCG. बाकी सब same है.
Okay.
STCG rate, LTCG rate, everything is same.
Okay, understood. Just on this, also wanted to double down from a liquidity perspective. Is it as liquid as, say, physical gold?
Yeah.
Both gold mutual funds and ETFs, they're very.
Yeah.
So no inherent risk, so to say.
No inherent risk. Only thing is policy wise, if there are changes and all that, taxation wise changes happens. Let's say in between taxation on ETF was changed. Suddenly the demand fell. So the prices will decrease obviously. Because it's essentially trading, right? Buy sell. So if taxes are increased, I will say, hey, I want to sell it at a lesser price. So that and all can happen, but inherently backed by gold.
Okay.
So there is no risk.
Got it. So I think we covered all forms of gold investment. Just curious, how does your portfolio look like? What is gold allocation and what form within gold allocation, whether physical, digital? If you can share that, that would be great.
So my portfolio, I follow the same rule. My age.
Okay.
Right? So my age is 34. So about 35% of my portfolio is in gold.
Okay.
5% थोड़ा risk crypto and all that रखा है. And बाकी 60% is in all mutual funds.
Okay.
I don't mutual funds and some US stocks I have kept and all that, but predominantly mutual funds.
Understood. And within gold, what is your preferred form amongst the 4 types?
Physical. I am a physical guy.
Okay.
Because eventually, if you have a use case, if you ever have a use case of buying physical gold, then digital doesn't make sense. Because let's say ETF. There are a lot of people who argue that, hey, I can sell ETF and buy gold, right? But when you sell ETF, you pay a tax. Now you bought gold. Now when you sell, you pay a double tax. Okay. Eventually, physical में convert करना ही है, तो buy physical gold. If you have truly no use case of physical gold, then you can look at it.
Interesting. So, Manthan, as usually it's said that, time the market. Gold में भी ऐसा है क्या कि that's so volatile? Should you try to time it? What's your opinion on that?
So I'm a big believer of don't time the market, but look at the perspective, right? Look at what is happening around the world, right? One interesting thing for everyone to know is countries are buying more gold than ever, right? Why? Right? Because two predominant reasons, right? One, every country's reserve is in USD. 1945 US was smart enough, World War II got over, every country is poor, US is crazy rich because they entered late and they are also, till then they supply during the war and they grew. So they are very powerful. So they did a treaty that start using USD as a war, it will always be backed by gold, which got reversed in 1973 because US's supply reduced, it got reversed. So now US can print anything that they want and that is the big problem in reserves. Reserves may, let's say if I can't trust the value that I am exchanging, that value can suddenly be half. How can I keep the reserve? Because I have to continue exchanging and all that. So what has happened, there are two interesting things that happened. One, post COVID, US printed crazy amount of dollars.
Right.
Like in some 2022 and 23 or something, 2 years, they printed $6 trillion worth gold. Indian whole economy is $3 trillion, right?
Wow.
They printed that dollars, right? So inflation obviously is passed around the world because everybody is holding dollars. That's one. Secondly, the interesting that happened is during the Russia war, they froze the USD reserves.
Okay.
And also the same thing happened with Afghanistan. So what actually that meant was countries are now worried. Hey, USD can print whatever, US can print whatever amount of USD that they want and they have proven that you can't trust.
Yeah.
Secondly, they can freeze your reserves at any time they want. So countries have slowly started buying crazy amount of gold and that is why gold prices are surging also.
Yeah.
It's not going to be a slow process. It might take 20 years, 30 years, but they have started. The indication is people have started thinking they can't trust USD. they're moving back to gold, which means on a long term you should always buy, because logically this is what's going to happen over next 20 years, 30 years, 50 years. Countries are going to buy, which means their price is going to increase. So you should buy. The only thing that I tell everyone is do not time SIP. And I think
that's the right way to go.
right way to go.
No, fair. So, according to you, we spoke about the four, from physical, digital, SGB, and
ETF.
ETFs and mutual funds. What is meant for who? Like, if I am, say, a 25-year-old, what should I go for? And versus if I'm a 35-year-old, is there a framework in your mind?
More than your age, the framework is your use case. So I say this, if your use case is you are purely doing gold investment for trading purpose, you are timing the market, you want to make benefit of price appreciation, and your horizon is less than 2 years, then you can do ETF, because in ETF after 1 year LTCG applies. So rather than tax slabs, it's now 12.5%.
Okay.
But if it's about 2 years, so my personal recommendation is anyway ETF are 1 to 2% lower than physical gold. After 2 years, both are same tax. Even if you don't want to use physical gold, because these are not planned. Like when I started investing, I had no plans that I will need physical gold someday, but now I think I do. Right? So my preference is ideally physically karo if your horizon is about 2 years.
Very interesting. Thank you so much, Manthan. It has been great.
It's a pleasure.
Lovely talking about something that's we all talk about, but don't talk about it as an investment, right?
Yeah,
so the
yeah,
irony
absolutely.
there. So it was great.
And I
to
think
have
you guys are doing a great job of educating, because people talk about jewelry a lot, right? But people don't talk about gold. What is physical? What is digital? What are the things you should be aware of? What are the things? I think that is commendable.
Great.
Thank you so much.
Thank you so much, Manthan.
Thanks.
Had a great time. Thank you.